Hey everybody, my name is Gareth Soloway and welcome to Friday morning, 9 a.m., The Game Plan. Welcome, I hope everyone's doing well. We got a lot to discuss today. We just got the non-farm payrolls report, so we're going to cover that. We're going to look at what it's doing to the US dollar, what it's doing to the yields, what it's also doing to the stock market and the crypto market. So we're going to jump right in here, guys. Over here, let's go. These are the numbers that just came out. Non-farm payrolls, 187,000 jobs added in the month of, basically last month, in the month of July, right? So check that in August, my fault there. So this is your August number added. The estimate was for 170,000. So it actually came in better than expected. Now what we see down here is, this is the surprise. The unemployment rate jumped. It went up to 3.8%. from an estimate of 3.5%. Now, this is the key. A lot of people are very confused. How come jobs were better? We added more jobs, but the unemployment rate jumped. That means more people unemployed. And the answer is this right here, your participation rate. Now, the participation rate is how many people are actively looking for a job. They're participating in the labor market. They're looking for work. And the thought process is this, right? So again, is it that the economy is stronger, like this number says, or is it the economy weaker like this? And the answer is it's probably somewhere in between. And I think that explains why the stock market futures are rallying on this number. Anything that shows a glimmer of hope that maybe the Federal Reserve won't hike as much, maybe just one more hike, maybe no more hikes, that is going to be a positive in the near term for the stock market. So let's break this down. Why is the participation rate important and why is this number elevated? So essentially this, when you are not looking for a job, let's say you made a lot of money in crypto, or let's say you saved a lot of money during COVID, which I think a lot of people did. They weren't actively looking for a job, so they are not included in unemployed. If you are not actively looking for a job, you will not be counted in this number, okay? Now, my guess is a lot of people have finally spent down their COVID savings. In fact, I was just talking to my head trader, Ben, and he was telling me that he knows of a guy who actually, during the crypto bull market, he was just making money in crypto. But now he's actually having to go back and look for a job because of the crypto bear market. So these type of scenarios mean more people are moving back to looking for jobs. Therefore, this number is going to go up. So again, that is something that people won't tell you necessarily. I want you to understand. Again, someone not looking for a job, not counted as unemployed. As soon as they start looking for a job, they are counted as unemployed. And therefore, this number goes up even if we were adding more jobs in the course of the month. All right, so that's a little breakdown of the jobs data. I want you guys to fully understand that. Let's now jump over here. Here's the S&P 500 or the spiders chart. This is the daily chart of the SPY. Now, I've put some trend lines on this chart, but before we go into that, let's flip over to the intraday. Now, the intraday chart basically shows us what's going on pre-market. So what we can see is that yesterday we sold off. We closed right down here. Let me get my drawing tool up so I can draw for you guys. All right, so yesterday we closed right here. In the after hours, we were up a little bit yesterday after the close. This morning, we've been trending up into that number, and then when that number came out, we popped up here. Now, again, we're not up a tremendous amount. It's not like a massive move to the upside, but nonetheless, the markets are higher going into the open. Now, the question is this sustainable, and how high can the S&P 500 go, or the SPY? And for that, what we want to do is we want to flip back to the daily chart. All right, now, looking at the daily chart, we put in some really cool trend lines, or I put in some really cool trend lines. If we zoom out here, look at this. You go all the way back to COVID lows down here. You have a pivot low. You connect it through this low, and it goes right through this top right here, and that gives us that low right here. Now, if we take this low and we connect it right through this low and this low and this low, we also get that. So that gives us a base point of why the market bounced recently when we sold off into that level. Now, if we zoom in a little bit on this chart here, right, if we look at the all-time high on the S&P up here, we can now connect it to this recent high. Now, for me, as a technician and seeing that the markets are up, it makes me think that there's probably a level we're going to here. There's a gap right in here, all right? And if we put a gap fill trend line right there, and we have this downsloping trend line, that probably gives us our upside target for where this market may go today, not necessarily all today, because that would be a really big move for today, but into early next week. All right, so what we're looking at here, guys, again, if we look at the chart, this gives us an approximation of a target. And I'm going to zoom in so you guys can actually see this, right? So here's the gap right here. This is the gap. Here's your downsloping trend line. So again, just zooming in, I'm just going to do my best to draw this here, right? So this is your area right here. We're talking about 457 to 458. Anywhere in this vicinity, I would say right in this area is your zone for where the S&P is likely going to go. So there is some upside here. There's no doubt about it. I am curious, by the way, and I will say this. There is a small chance, okay, and this is a tough one to make a call because the futures are already up, but there's a small chance that the S&P 500 could reverse some of those early gains because the unemployment rate went up, not because the economy's weakening, but because participation is moving in. So it's really not like a lot of bulls will tell you, oh, the unemployment rate jumped to 3.8%. That shows us the economy's weakening. It's not really that simple. So it's not like a slam dunk for no more rate hikes. It's kind of this in-between area. And I think, again, I'm curious to see throughout the course of the day how the markets behave. Now, one thing to keep in mind for those of you that are stock market people and also for crypto people, the stock market is closed on Monday for the Labor Day holiday weekend. So generally, and I've traded for 24 years, generally when markets are going into a 3-day weekend, they tend to float higher. It's somewhat unusual to see a sell-off pre-holiday. So just be aware of that. That partially has to do with the light volume, partially has to do with the algos that want the market bid up. The government wants the market bid up, so people spend money going into a holiday with all those Labor Day holiday sales. Okay, so let's talk a little bit more here about what we got going on in the markets. I want to show a couple different charts. The first thing, and I talked about this yesterday, the first thing I do anytime I get big news out in the morning, I take a look at what the dollar is doing. What is the US dollar doing? Because remember, if the Fed is not going to hike anymore and start cutting, the dollar should decline. All right, if the Fed is going to continue hiking, the dollar probably goes up. It strengthens the dollar. The more that interest rate goes up, the more money wants to be in dollars, the more demand, the price of the dollar goes up. So what we see here is initially on the reaction, we had this massive fall in the dollar, but we have bounced back a little bit, and that tempers the gains a little bit. It means that essentially we're not going to, as of now, if the dollar stays here, we're not going to have a runaway massive move up in the markets. It's more going to be muted. All right, so that's one of the first charts I look at. The next one I look at is the 10-year yield, because this also gives us guidance on Fed expectations. And what we can see here is that essentially we had a drop in yields initially on the 10-year, and then we have bounced back as well. So I think what we're seeing here is what I just hypothesized to you guys, which is the jobs report, the non-farm payrolls came in better than expected. Unemployment was worse than expected, but unemployment wasn't bad because the economy is weakening necessarily. It was more people coming into the workforce looking for jobs. Essentially, it's a precursor to a slowdown. They've spent down their savings. The crypto markets aren't making them millionaires anymore. They're losing money there. They got to go back to work to get a job. So again, what we're seeing here is when all is said and done, yields are just slightly down, which tells us that generally expectations for a November rate hike, they're still less than 50%, but they haven't declined massively. Excuse me. All right, so that's just a good chart to look at. I do want to go over the QQQ chart as well. The Qs are trading up sharply on the day here. We weren't up much, but we have gathered steam here. Looks like we closed yesterday around 378. We're trading around 360, 380.63. So that's about a 2/3% gain on the NASDAQ 100. Now, if we flip over to the daily chart and we look at this chart, we have these same trend lines, right? If we zoom out, we can clearly see here's your pivot high over here. We connect it to this pivot high. That gives us a resistance level, which is around 386. All right, then we have this support line down here. That gives us a low basis. And essentially what this is forming and what the S&P is forming is what's called a wedge pattern. A wedge pattern is price, all right, in a tighter range, right? It's starting to get tighter and tighter. And the thing about a wedge pattern is that whichever way it breaks, you generally get a big move in that direction. So what we're going to do is we're going to start watching this level here, and then we're going to continue to watch this level. And what we're going to expect is that price probably stays like this, but eventually it either breaks this way or it has a big break to the downside. And that, again, is something that we want to pay attention to. So you have this wedge pattern on the market, and again, we will be monitoring that quite a bit. Excuse me, guys. A little bit of a cough today, fighting a little something there. Okay, next up, I do want to talk a little bit about a couple other charts here. So let's jump over to this other screen. What I want to do now is take this unemployment data away, and we're going to move to charts of crypto. Now, cryptocurrency, guys, this has been a wild move in the markets. And every time I see this, it just reminds me that we are still in a bear market in crypto. Now, people made fun of me saying it was still a bear market. That's fine. That's part of the job. But what I want to show you is that when you have good news in crypto and the gains go away within a day or two, that is never a good thing. So let's talk quickly about this, right? What do we have here? So if we look at this chart, we can clearly see this was your BlackRock news with a big pop. This was your Ripple news that they won their SEC case, right? And look at how it popped, and then the reversal occurred a day later. That's not good. And I even commented, this is what's called a reversal candle. And a reversal candle is never a good thing in a chart when it's at the high end of the range. All right, so what did we do? We trailed off. We then had this dump out. Then right down here, we had the grayscale news just a couple days ago. We had a pop, and then 2 days later, we're back down. That's the classic hallmarks of a bear market. What it's doing is psychologically, it's killing off all the bulls. You get a bunch of bulls here to buy in, okay? And then here, even more bulls buying in, and those bulls are made a fool, essentially putting out of the money. Now, once we got down here, which basically was the start of this move, then these bulls that bought in are like, what the heck, man? I thought this was going to be the new bull market. They get wiped out. Then you get another green pop, which gets more people to go bullish, and they get wiped out as well. And that's the hallmarks of a bear market. All right, it just is what it is. The bear markets, the job of the bear market, and this is a bear market in commodities, in stocks, in crypto, any asset, real estate is included there. A job of a bear market is to break the will of all of the bulls. And when it breaks everyone's will, that's when you get a bottom, all right? Case in point, I want to show you this chart here. Let's go to the S&P 500 chart. All right, we're going to go to a monthly chart. I have a long-term channel here, okay? All right, so if we look at this, and we're going to erase that for now, but if we go back to 2007, right? In fact, let's go to the weekly chart. Let's go all the way back to 2007, and bear with me as I bring this up here. So we look back at 2007, and basically if you looked from January of 2009 all the way to March, the flush was in, right? So what we see here is this was your most panicked sell, right? You had this kind of downward motion where you were at the highs, right? Here's your S&P trading at the highs up here, and you have this stair step down. And every time you stair step down, right, you have kind of this, oh, well, now we're in a new bull market. Oops, nope, we're not. Now we're in a new bull market. No, we're not. And you had these green candles here that really got people bullish. All right, and this, again, is so universal to the psychology of everyone. The thing is, once this happens, right, so then you had this flush, which was dramatic, and people thought again, oh, my goodness, finally we've reached a bottom, and then the final flush. And look at the final flush. 1 candle, 2 candles, 3 candles, 4 candles. Right down here, that's when you took out the last of the bulls. And I still remember this vividly. I traded through this, folks, and I still remember people wouldn't open their 401ks because they didn't even want to look at it. In all fairness, it's what's going on in crypto right now, right? People that have long-term holdings in altcoins, they don't even want to look at their portfolio. They're just like, dude, it's too ugly. It's too nasty to look at right now. That's what happens in every bear market. And it doesn't, this is very normal because this gets the few people that are kind of still a little bullish to get more bullish and coaxes in people. It's only when you bottom out where you don't coax any bulls in anymore, that's when you actually make a low because everyone has already sold and you get to a point of kind of essentially capitulation where people are just like throwing in the towel and they're like, I can't deal with this anymore. And that's when the bull market can begin. So again, going back to crypto, it's the same thing. Like again, even if you look at the 4-year cycle, this is still supposed to be downward action in Bitcoin, and I think that's important to recognize as well. Is that when you're looking at that, you have to understand that that is still technically, if you go back to the 4-year cycle. Now, I've argued against the 4-year cycle because we don't have a Fed that is printing money, but eventually, I do think a new bull market is coming, probably in 2025. All right, but just a reminder here, looking at this chart, I'm still in the camp that we have to test 25,000, right? 25 is right here. We haven't quite hit that level yet. We've come close. Then I think you have to test this, and at least, and I think you could even go lower, but if you want to break the will of all the last remaining bulls, and there's not a lot out there, honestly, they've been really getting crushed with these pop and drops. But if you want to do it, you need to at least take out the 15.7 low, 15.6 low, because that could be capitulatory. And we get to my first high target of 12 to 13,000, maybe 10 to 9. I don't know if we'll get to 10 to 9 because I think the spot ETF will be approved at some point and that will bring institutional money in. But I think in the very least, you probably have to go test and maybe pierce this low. All right, so that's a little update on that front, guys. Just a couple things here to go over. If we look at gold, gold is rallying again today, guys, and I've been pounding in this game plan. I've been telling you guys again, this is a buying opportunity. When we were right here, key support, retrace to the scene of the crime. We had to test it again. Now we're off to the races. You'll have a little bit of resistance around 1980, but my guess again is if we look at the bigger picture, and I went over the bigger chart patterns here, the bigger picture continues to show that we have this scenario where there's a bullish pattern building in gold. All right, bullish pattern meaning a big up move like this, and then this is all consolidation, right? All of this is consolidation. You're digesting this move for a move up. And in fact, I've shown in the past, and maybe I'll show this in one of the game plans next week, if you go back to the 1970s and 1980s, this exact pattern is there. And you can look at the inflation and track the inflation, and it mirrors what we're seeing today. And what we saw was gold eventually broke out and actually went up 9x. Now, I don't think we're going up 9x in gold from here. I'll tell you that. I think a 2x or a 3x in the next 3 to 5 years is possible, but a 9x probably not. But I do think that this is an underestimated asset that hasn't performed equal to the stock market. And once we get in a market where the stock market struggles for a long period of time and inflation remains elevated at 3% or more, you likely are going to see more upside in gold. It is going to be the go-to asset along with eventually Bitcoin. Eventually, Bitcoin's heading a lot higher. It just needs to get through this growing pain period here with regulation, with adoption, with all these other things out there as well. All right, so that's where we are right now, guys. Again, couple stocks. We're going to jump back to this screen over here. I want to just go over one stock moving today that is catching my eye is Broadcom. This is a semiconductor stock. And again, Broadcom is something to watch here. If we go to the early or pre-market, we could see yesterday Broadcom dumped after hours on earnings, trading as low as almost $875 from basically a high of 930. It has bounced back because the markets are moving up. But if we're looking at levels today on the daily chart, where are those levels going to be? The only level I would pay attention to here would be this pivot point right in here, right? So you have a very defined pivot low. There's a gap fill there as well. Pivot low, pivot low. It's around 818 to 820. So if you get down, and again, I don't know if that's a big sell-off. That would have to be a major sell-off. But if we dump down to 820 or so, that does become a very, very interesting support level for a trading opportunity. Not a swing. I don't like it as a swing or as a long-term investment because I think these stocks have to come way, way, way down more, just like I think NVIDIA eventually has to go down. But nonetheless, that becomes a buying opportunity. All right, guys. So there's a lot going on here. I think the big news of the day, the non-farm payrolls number, the unemployment number, that's where the markets are reacting. Watch the US dollar, watch the 10-year yield, and then track the S&P. Remember those levels we talked about on the S&P, on the QQQ, those trend lines to the upside with the gap fills? That's most likely where we're headed. Then the big test will be. There's a lot of cycle analysis saying that September could be a very ugly month for the markets. I will bring more of that data to you next week so that we can talk about maybe capturing some of that alpha to the downside if the dump is achieved. But first, I think we probably have to fill that gap and hit that trend line to the upside. All right. Thank you guys for tuning into the game plan. So much appreciation for each and every one of your eyes. I know your time is valuable, and I appreciate it. Again, spread it to your friends and family. Let's make this the biggest internet show out there. You guys have a good one. Take care.